Since the ETFs have been launched now, the demand for Bitcoin is something like 12 times higher than the daily emission of Bitcoin, right? So you're having a wall of demand meet a cliff of supply, right? So there's no supply. You can have a supply shock and a demand shock at the same time. So that's why the price is going to go bonkers. That's why I have this $220,000 price target, because once this thing gets rolling now, once it gets to a new all-time high, every single chart of every single analyst on every single Bloomberg machine flashes a huge buy. But in the case of Bitcoin, when you're effectively orchestrating a rug pull on the system, they're melting down anyway. Right. But this would accelerate the meltdown. You know, then this money starts to roll in, and it's never been easier to buy Bitcoin. Remember, up until these ETFs, to buy Bitcoin was relatively difficult for the average retail buyer. But now it's as easy as buying any other stock. They can go to their Schwab, they can go to Merrill Lynch, anybody like that. And they can buy into a Bitcoin ETF. So it's never been easier, and the interest has never been higher. The fiat money world's never looked worse.
Max Keiser recently shared his thoughts on the Bitcoin and crypto market crash, clarifying that Donald Trump was not to blame for the recent downturn. Keiser explains that price signals can often be misleading, and he expects not just a pullback in the S&P 500 but also recognizes that institutions are playing a major role in the current volatility. According to 10x Research, of the $38 billion that has flowed into Bitcoin ETFs, only 44% comes from long-term investors, while 56% is from short-term traders capitalizing on price fluctuations. This suggests that many investors aren't buying Bitcoin due to belief in its future, but are using the ETF to short BTC, betting on its price decline. Keiser also criticizes the BlackRock Bitcoin ETF, calling it a significant misstep by the SEC. He believes we're heading towards an unprecedented event as the printing of fiat money continues to push economies toward a cliff. Despite the current drop in Bitcoin's price, sitting at just over $88,500, down nearly 8% over the past week, Keiser remains bullish on Bitcoin. He discusses the collapse of fiat systems worldwide, highlighting how the dollar is falling faster than ever before. Keiser believes this is where Bitcoin will prove itself as a true form of money, unaffected by inflation or the relentless printing of money by government. Now, let's dive into Keiser's latest interview, where he shares his Bitcoin price prediction and explains why BlackRock's strategy could blindside the crypto market.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
If you were to understand that the financialization of everything has gotten to this point, then you would understand that you can effectively orchestrate a rug pull on the whole house of cards. People who are feeling like they're broke, they're going to get a lot broker because the purchasing power of that money is continuing to fall. And all activists have a common cause and a common enemy. It started with Occupy Wall Street. Occupy Wall Street was an interesting protest because it went after the banks on Wall Street. And that was the first time, to my knowledge, where activists were looking more at the root cause of the issues that they were taking exception with. You know, if we can cut off the funding, then that would be an effective campaign. And that's true. But in the story of Wall Street and the money printers, of course, they can just print an endless amount of money. And so it's impossible to really wage an effective campaign. But in the case of Bitcoin, when you're effectively orchestrating a rug pull on the system, because you are defunding the central banks by putting capital into Bitcoin, so that capital ends up going into this unconfiscatable perfect money Bitcoin, and the folks that are in the business of printing all that money will eventually just melt down. They're melting down anyway, but this would accelerate the meltdown, which I think you need to do to right the ship, to get to a point where there's strong fundamental values upon which you can build a society. But right now we don't have that base to build a society on because it's all being printed into oblivion. Anybody who's access to a printer will print an infinite amount. And so you have a dysfunctional society, and that's happening all over the world. So everyone around the world, every conflict has a common enemy, and that is the central banking cartel. And we all have a common solution, and that is Bitcoin. So we're all working on the same fight at this point. I guess I call it the global insurrection against banker occupation. So we're all living under banker occupation, and the global insurrection is Bitcoin. I want to be a more successful investment banker. I mean, I'm gonna have to get into a higher level of committing massive fraud, or I have to know more about how the legal system works so I can get the loopholes for the clients who are paying me the big bucks. So it's an inward soul crushing experience to succeed in the fiat money world. With Bitcoin, it's the opposite. The more you learn, the better you feel about yourself, and the better you feel about the prospects for others. It's a much more hopeful feeling that you get.
With unwavering enthusiasm for the crypto space, Keiser confidently predicts explosive growth on the horizon, driven by BlackRock and other major crypto players. He assures that a long-anticipated surge is imminent, with Bitcoin's price expected to rise exponentially in the first half of 2025.
So Bitcoin is a short squeeze on the global Ponzi scheme, effectively. We live in a global Ponzi scheme. All banks are Ponzi schemes, right? Fractional reserve banking, which is a term that's pretty commonly understood, right? The bank lends out more than they have on their books, right? And the justification for this is that, well, it's an acceptable risk because we're stimulating growth in the economy. But the fact is that they're exposed, because if there's a run on the bank, then the bank closes. And we've seen that throughout history. This happens from time to time.
And might be happening again soon.
Could be happening. They created the FDIC, Federal Deposit Insurance Corporation, after Crash 29, and also SIPC and other facilities, government guaranteed to backstop the system. The Federal Reserve Bank is meant to be a backstop to the system. It's supposed to be used in extremis. It's supposed to be there to be a barrier against essentially bank runs. That's one of the primary roles of the central bank. But under Alan Greenspan, starting in the 1980s, you have the concept of the activist central bank, who is not there to be the lender of last resort, but the speculator of first order. Like, nobody is speculating harder than the Fed. The Fed's balance sheet is more leveraged than any corporate balance sheet. It's leveraged, like, if you did an actual accounting of what's held by the Fed, their loan to ratio is probably in the many thousands of percentage points, whereas the highest leveraged corporation in America might be, at most, I don't know. I mean, I'm guessing, but it's nowhere near what the Fed is. The global economy right now is 300% debt to GDP, right? So the GDP of planet Earth is roughly 100 trillion, and the global debt's 300 trillion. So we're living in a 300%, debt to GDP on planet Earth. Is the highest it's ever been. That's number one. But these central banks, nobody's more leveraged than the central banks themselves, because they always come back to the same thing. We're just going to print more money. And they always do. So now in the US, they've printed $34 trillion. They're printing, and they no longer report the debt ceiling. The debt ceiling has been removed. That's no longer an item that you see reported. That politically, there's nobody saying, like, we have to address the debt ceiling this week because we hit the debt ceiling. We have to raise the debt ceiling. They just said a few months ago that that's being removed. There is no debt ceiling. Just like they just removed also the reporting of M3, which was a reporting of the money supply. They do M2 now, but M3 got too scary. So they don't do M3 anymore. They do M2. I'm sure they'll take away M2. So the indebtedness of the bank is astronomical. And so when you buy Bitcoin, you're doing a rug pull on the central banks, essentially, because they still need, at the base layer of their Ponzi scheme, something. So the central banks are so leveraged to this thing. So Bitcoin is a rug pull on the global central banking system that is, historically speaking, at no greater point of vulnerability ever in its history. It's never been more vulnerable than right now. It's never less well capitalized than right now. I mean, right. You can go to the games that are being played. They don't just, like, for example, Jay Powell just doesn't call up Jamie Dimon and send him $1 trillion, right? That's not how it works. But what they do is they let Jamie borrow an infinite amount of money from the Fed at 2%. And allow him to lend it back to the Fed at 3% on the same day. that's a known operation with some fancy name. So they can't write the check to Jamie Dimon, but they put it under the machinations of a scheme like this that I just described, and they'll say that this is necessary for whatever reasons. But it's the same as just writing Jamie a check. And it's just outright corruption and fraud.
Keiser challenges traditional macroeconomic metrics, arguing that they are often manipulated to support a specific narrative. Labor statistics and inflation figures, he claims, are selectively measured to create desired outcomes rather than accurately reflecting the true state of the economy. In this context, Bitcoin stands out as an alternative, free from the distortions of conventional economic systems. Keiser also points out that major corporations like Apple, Amazon, and Google will leverage their long-standing relationships to quickly acquire significant amounts of Bitcoin through a spot ETF, bypassing the complicated processes involved in purchasing the asset directly. This highlights the transformative potential of cryptocurrencies within traditional financial institutions. Michael Saylor emphasizes the importance of embracing digital currencies as the economic landscape evolves rapidly, and encourages investors to use Bitcoin's potential to secure a more prosperous financial future. What do you think of Max Keiser's latest interview? Do you agree with his Bitcoin prediction? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.